What's up, everybody? Friday wrap-up show, 13 straight days. I am still on fire. Love is my guest today. She is like dynamite, and together this episode will be explosive. New viewers, platform members, rules are on the website. If you follow the rules, you're going to be a safeguard when you're investing. I'm trying to make you more efficient. Small piles. I don't care if you're trading $500 in your account. Small piles. You secure profit $120 3 times a week, right? You do that over and over again. It's going to turn into big piles. That's how you get your account. There's no home run. It's base hits. It's walks. Let's talk about yesterday real quick. I mentioned one stock at the start of yesterday, which was Upstart. What a shock. All right, so Upstart started today at like 133. It went to 139. Secure profit because that's what we do, okay? We don't ride it up and ride it back down. Positions I also bought on the mega dip. DocuSign, Square, and apps. All right. I'm holding also TTD through earnings because their earnings are estimated at 13 cents. I happen to do my math. I think they're going to come in right around 21 cents. Their year after year top line should actually beat by about 80 or 90%. So I'm pretty excited for that. If you're going to get value here, and I've got Love with me, so you have to give us a thumbs up, subscribe to the YouTube channel, and push the damn notifications. All right. I've got Love joining me today. Most of the slides we're going to do are hers. Please tailor your questions to her because her entry points are just ridiculous. Some of her positions, she day trades and gets out. Other positions are longer term. So when you see the slides, and some of them might say 200% for the 1 day return, or some of them might say 200% today, but a return of like 400%, you could ask her, hey, how do you know to hold on to that one, whereas you want to secure profit on your other one? All right, so let's welcome Love, and let's bring her on. Hey, how are you, Love? All right, we're not going to do slides yet. Hey, Love, do you know what's worse than a market crash?
What's worse than a market crash?
Oh, no, wait, let me think. Do you know why? Let me just think. Do you know what's worse than a market crash? Do you know what's worse? I guess you probably don't. I will tell you, a divorce is worse than a market crash because you lose 50% of your money and your significant other is still around. Now, I've been divorced twice, but that's needless to say. All right, let's get to some slides here. I just wanted to lighten it up. It's Friday afternoon. Get to some slides. I think the first two are mine, and then we're going to let Love take it away. So, market shifting. This is what I told platform members this morning, and it is so very true. All right. There's a shift from strong tech stocks to the Dow. There's a rotation in play, and from strong tech stocks to the smaller cap and mid-size cap. So the rotation has started. I still like materials plays. I liked CAT. I liked AA. AA was up like 5% today. US Steel was up like 3%. The most important thing is still going to be earnings. All right, let's get another slide. I think the second one might be mine. All right, this is a dude who's on my platform. Matt, I wanted to thank you so much. Biggest gain I ever have. Followed your rules. So I'm assuming he talked about averaging down. He probably had 2 contracts, bought 2 more on the dip. He's in at 264 and secured profit somewhere between $9 and $10 today. That's a huge return. What is that, 200? Slide up there.
That's huge.
Yeah, that's huge is right. John, another slide, please, man. All right, here we go. Oh, this is mine also. Again, the other day I mentioned when Square dropped, please, let's get into Square and secure profit. So Square dropped. Oh, this was Roku. Sorry. Roku was going to be the next one. Square was this, whichever. Square was what? It was 24%. Again, you make money, you secure profit, we exit out. All right, let's get into some Love slides. Here we go. Perfect. So we'll let you take the way. I know you have Qualcomm. All right, so let's just go through the slides. She's got Qualcomm here. She was turning 13%. She was showing everybody how she got a great entry. This is early in the trade. Again, only 2 contracts. Let's get another slide, and then I'm going to let her talk about all the positions, and we'll get some questions out there because I want to be as quiet as possible. MSTR. Now, I joked about MSTR before we went live with Love because I said to her, she trades this option so damn well. She knows it like family, which is one of the lessons I teach. Now, if she only traded MSTR, now we see these slides every day. So if she traded MSTR with like $10,000 and had a return of like, I don't know, 15,000%, she'd probably be at $50,000. The point is, she's not that far from doing it. All right, let's get another slide. It also might be an MSTR. No, this is the Upstart one. So Upstart, what was the return? Had it yesterday, 287% today. Total return, 281. So got into it right before close yesterday. She's paid $1.19. I mean, look at that return. It's absolutely ridiculous. Let's keep in mind, Upstart was $1.34. $134 in this picture. It went as high as $139. Okay, so you're talking about a 287% return. Probably turned into probably a 500% return. I'm thinking. Let's get another slide, and then she's and that's a Roku. That was what, a 77% return, $3,000. These little positions add up. Not so small when you start. They take one position, it goes down. You take another slide, or are we done? All right, and last one, Edit. So I mentioned Edit the other day as well. This person was up 106%. Edit ran up to $56 today. So if the break even is there, you add another 100% on that, you're probably looking at about 220, 230%. All right, let's kill off slides and welcome Love.
Hola, people.
All right, excellent. So please, we're just going to get started. Again, Love, you impress me every week, and I asked you back this week, and hopefully you'll come back next week. But you just get the most amazing entries. You make these long posts about using the rules and how to effectively use the rules. And what I'm trying to teach everybody is just how to be more efficient. So please, if anything's changed from last week, or if there's anything you see, let our viewers know, like, how to improve their skills, what to look for. How big is the drop? You know, when you hold on to some of these, how come you hold on to some one day? How come you hold on to some of them for longer? And just share, please.
So, well, I guess we should start at the beginning, keep it less confusing. Some people ask about how to know which stock to go into and which one's not. A lot of people say that some of the things that we post returns for, they're not alerts. They're not alerts, right? They are actually stock that we see that we don't necessarily think that it's going to be 100% like an alert would be, right? So it's a little bit riskier. So you still get those, right? They're just not alerts, all right? And so when people see things like us talking about TD or Roku or whatever, and it's not on the spreadsheet, you can still add it to your watch list and then enter it at your discretion, right?
Well, let me ask you a quick question. When you see a stock, and let's bring up like Square or something like that. So when Square is going down the other day and it goes like sub like 250, it might have been like 248 or something like that. How do you know that you can get into Square then and that it's not going to drop even further?
Because it's on my watch list, which means I know that stock, right? So I have an expectation for each stock before I get into it, right? And so when it dips, I'm automatically, my brain knows that that's a sale and not a drop like Tiger did a long time ago. It's because I know where I expect it to be. I expect Square to be north of $300, right? And so knowing that, anytime I see it like sub 280 or sub 290, I'm going to get in.
Okay, so a suggestion for our viewers might be, if you have like 10 favorite stocks, you might put them to the top of your watch list. And then if you're watching and you see any one of them falls like 5 or 6% in one day, is that when you have the light bulb? So it's good to separate them then. The ones that you have interest, rather than just having a watch list where you have them separated by category like me, you take your favorites, you might put them to the top of your watch list, and that way the alert goes off in your head when you see Square drop 9% in one day, or Pins 20%, or Snap dropped, 12%. So all these fall, but you look for a good investment opportunity when that happens.
Yeah, I keep a separate watch list. So I have one main watch list, and then I'll have a separate one on Webull called swings or current or something to let me know that I'm looking at those particularly, because my watch list just tells me when things are like overall moving, right? Little line graphs. But to actually know what I want to trade, I have to click inside of the stock, look at the chart, look at the demand, look at the big order buys and things like that before I know if I want to get into it. I'll read the news, things like that. So when I put something in that list, that current list or the swing list, that means I've already looked it up, right? I know where it's going to go. So things like Zoom, Square, some other people mentioned PayPal today. I didn't get into that, but things like that, I know in advance. So whenever it dies, like this morning, I'm getting in. Now, how do you know if you call the bottom though? Well, if it's a good sale, I'm probably going to get one contract, and then I'll wait, and then I'll buy another one, and then I'll wait and I'll buy another one until I get to the amount that I wanted to get into in the beginning. So with Square, like I knew because earlier this week I had like a 400% return on one a call when it dipped last time. So I'm like, I think it'll at least get back to that. So when it died today, I bought one. And when it kept going down, I bought another one. So I ended up with like 10 Square contracts for next week.
Okay, now here's a good question for you, because I see some of your contracts, you'll go in and you'll pay $119 per contract, like one of the ones we showed. And then I've seen other contracts of yours where you've gone into FCX and you paid $37 a contract. And then I've seen your MicroStrategy contract where you'll pay $2,900 for a contract. So how do you make the decision that you're buying a $37 contract versus a $150 contract versus one that's very secure that might be a $2,000 contract?
So that is definitely dependent on the stock, but for instance,
for the first one, I'll give you the example, FCX, because I remember all of your trades. Your FCX contract, I think you bought the contract for $37.
Yes. I bought
when
one
it dipped,
for 35 right, and one for 30, or I had two different strikes, and one of them I think I got in at around $26, and the other one was like $39.
That's a very cheap contract. It was probably out of the money by $1 or $2 or maybe even $3. So how do you decide in that instance that time you're going to go out of the money? Because my rules, and I like to play by my rules, where I'm in or at the money, but I have seen some great returns on your side. But not every time you're choosing out of the money. Sometimes you're in the money, sometimes you're under the money, and sometimes you're over. And I was just wondering, let's take FCX. You bought really cheap contracts. I think you got like a 400% return on that. So what made you choose out of the money for something like that?
Well, I had additional information, right? I always say that if you're going to go out of, you always default to in the money. But if you have evidence, support for out of the money, then you go. And my support was going to be the announcement of the infrastructure bill. I kept reading information about them getting close to having one, like not passed, but like finalized. And that I thought was going to be the catalyst. I looked at how high FCX had went, like what its all-time high was. I was like, okay, it could go here. And that's what made me pick it.
Okay, so your strategy basically on the past charts, now you purchased FCX, I think it was going just like around $31, and now I believe it's at like $37 or $38 this week. And the high that we spoke about before, I think was like $41 or $42. So when you looked at the chart, saw it dipping, saw what you thought might be support at $31, you then looked at the upside potential, where this stock had been a month ago, 2 months ago, saw $41, said to yourself, it doesn't need to go to 41, but if I can get it halfway there, I'm going to crush this option with at least 100% or 200% return. So everybody following, you make predictions, you pick your stock or your option, you chart it out, and you say, if I'm correct, it could go up here. If I'm wrong, it goes down here. If I'm correct, I make 200%. If I'm wrong, I lose 50%. As long as your ratio is better than 2 to 1, you'll make 60%, you'll lose 30%. It's a good investment. All right. And other options like what are your plays going into next week? How about this?
Sure. So
no one cares about spilled milk. We always talk about how much money we're making or what great positions. Let's go about next week. What would you think about what's on your watch list? What would you be looking for? Let's say in a perfect world, you're watching XYZ stock and it declines 7% on Tuesday and you're like, that's my entry. So what stock would fill in that blank?
So I can actually start with some from today because
excellent.
Was on sale today, right? So I think that the initial thing when you see all those things declining and they keep going down, you get scared, right? You start to panic. You're like, I don't want to get in that. And that's one of the reasons, like say you bought Roblox this morning, right? And it kept going down. That's one of the reasons you don't go all in, right? You give yourself a chance to be able to buy some. But I bought quite a few out of the money options today. And the reason I did that, and I'll tell you guys what I bought. The reason I did that is because the stock had already hit what I needed to hit in terms of what was out of the money. Like for instance, for Square today, right? It dipped down to like what, 280, something like that. Well, obviously,
so Square was at 282. It dipped all the way down to 272. I was with a lifetime at it was 274, and I said it's definitely going to finish above 275. I wouldn't be surprised if it finishes 280. So you're watching Square, and what's your trigger point?
I would buy once it went under like $5 or so. I was like, this is an option. And then if it kept going, I got, 2 different strikes. But in that situation, yeah, I'm going to buy out of the money. I'm not going to buy in the money in that situation because I know that
Square is expensive. And
right?
she bought her first contract, just so everybody's clear. It opened at whatever it opened at. It was down 2%. She bought her first contract. If it went down 4%, she would buy a second contract. So no, but people try and make this complicated. How do you know when the bottom is? How do you know this? You can make any prediction. Whatever stock or option you're looking at, we're looking for a discount. So if it drops 2.5% on Monday, then you could buy your first option. If it drops to 5% down, you go in for another second or even a third option, and that's your game plan. So for anybody, whatever stock they're looking for, this would work as long as they're correct about the stock rebounding.
Yeah, that was a good buying opportunity if you had money on the side. I bought Zoom today as well. Did I buy in the money? No. Because I know that Zoom can hit 400 and it's below that. So I would buy out of the money in that case because I'm confident that it's going to get to where I need it to go in the time of my expiration. I also bought I do go with riskier options. When the options are a little bit cheaper, I do go riskier, like with FCX. So for some reason, I have Pfizer and AstraZeneca on my radar for some reason. And so I bought a ton of out of the money contracts for those two stocks. So, hey, if Moderna can have a run, why can't these two? I don't know.
There it is. So everybody catch that because she said it quickly and kind of joking around. That's her strategy. They're all semi-related. Moderna, Pfizer, and there's one other. What is it? Johnson & Johnson, but we don't care about
because I read something that they could have.
Yeah, no. My ex had Johnson & Johnson, and she thought she had a blood clot for about 2 weeks. So, yes, I understand that. But the Pfizer comment is great because you know how much Pfizer is going to make on the vaccine next year? $20 billion alone in revenue from the contract. All right, so we're halfway through. I would love to get some questions up there. God, I use the pun every time. All right, so let's get some questions up there. Please. Give a thumbs up if you're liking how this is going. Hey, Matt, how do I trade if I work from 8 a.m. to 4 a.m.? Sure. That's what the platform's meant for. So everything that we're talking about right now, and Love just gave you an example of you find a stock, you assume that the option is like, let's say it's a $4 option, okay? You assume the stock will go down 5% on Monday. If it doesn't go down 5% on Monday, you didn't buy anything. Now, if it goes down 5% on Monday, let's say you bought an option contract and then it rebounds and it only finishes the day down 3%. Your one option contract, while you're at work, you're going to be up 20%. So we talk about planning and making predictions. If you have a contract and you own something and it's a $200 contract and maybe you're in at $200, okay? You just bought it end of day today. You say to yourself, I'd like to make 30% on Monday, but I have to work. So the contract's $200. You put in the sale order at 8:30 a.m. before you leave for work, and you put it in at $260, which would equate to a 30% gain. You're at work. All of a sudden, your phone dings. Oh, you sold it. You really don't care that it went higher, lower, whatever it is. You're locking at profit when you're at work. But let's get some questions for Love.
Wait, I want to answer this one too, though. So for ADJ, I think that was it. So what I would do, like say for the strategy where I said that I buy at different intervals, you could totally just set limit buys at different intervals, right? They may never hit, right? But you could say, okay, I would pay $2 for this contract. So I'll put in a limit order, buy order at $2. And then I'll also put one in at $150 in case it drops, right? And I'll also put one in at like $110 too, just in case. You can still do that. Like if I have to go run errands, I would do it.
Okay, so she's using cost average on. You're at work, pre-market, the one contract selling for $240. You say I would never pay $240. I'm going to pay something cheaper. Your first contract would buy $200, then $150, and then $110. Worst case, the stock goes down to, or the option goes down to $1. You're in for 3 times, and you're only down like 28%. All right. If it goes down, it's right. Yeah, that's a great example, and that's great.
Opposite way for the sales order too.
Love this one's on you. How do you see the SPY turning out next week? What do you think? The Dow's strong, or are we going to see some type of pullback?
Okay, so I'm a little biased, right? So I'm always going to think tech is going to be strong, and some, I actually think that there's like this correlation between the SPY and the Tesla. So whenever Tesla decides to rebound, the SPY is going to be like out of the park. So I think it's actually going to be fairly strong next week.
Okay, and I'm going to give my prediction right here. I'm actually going to give a crazy prediction. Yeah. I'm going to say the SPY is going to pass 445 next week. and we're currently at 442. So that would be a pretty significant gain with the SPY crossing. Actually, I'll go with 446, possibly 447. I say the Dow's going to have an extremely good week. And I'm going out on a limb here because I'm going to say that only some of tech, small tech will do better. Large tech might sell off. And then I think there's going to be a rotation into the Dow unless there's a huge Delta variant spike. But as soon as we plateau on the Delta variant, the SPY is going to take off. That means airlines, cruise ships, I don't care what have you, they're all going to do strong. I'm not going into them yet, but I'm watching. All right.
Yeah, just watch it.
Let's get another question. See, you don't always have to move. I love how real you are, Matt. Oh, see, you use love and Matt in the same sentence. Matt, PDT tends to get in my. Okay, so you can't day trade. Here's what you need to do, okay? You could open up multiple accounts. So I opened up, and I showed this to lifetimers. I opened up a $1,000 E-Trade account last week. I opened up a $500 another Robinhood account. I opened up another $1,000 account because I like to day trade, and I also like to grow small accounts. So if PDT, which is pattern day trading, can't make more than 4 trades in a 5-day period unless you're using a cash account, but then you can't day trade, so you can't use unsettled funds. So I would open up 3 different accounts. I don't care if you have a small account, you only have $1,100, put 300, 300, and 400. Love,
No,
any other way around that one?
Yeah, I don't day trade. Actually, people think I do. I don't. I save my day trades. Like today, if MSTR hit 800 and I had just bought those options this morning, I was going to sell those, right?
So everybody save your day trades. Like I was saying, they are golden. So if you're in a trade and you're like, I could lose an extra $8, it's going down. Think about it. I'll suck up the $8 loss. I'll save my day trade. If you think you're going to lose a lot more, for example, I gave this example once. I had $24,000 into my account, and I said I don't want to use up my day trade, and the $24,000 opened at $3,000 the next morning. Yes. So it cost me $21,000 by not using a day trade, and that was the last time. And I said to myself, I don't care if it restricts me. I would have taken the restriction. I would have taken the $24,000 out and put it in a different account. That was over a year ago. I've obviously learned my lesson.
But I try to get stocks and get into positions that I can swing, right? And so, for instance, I bought MSTR. Yes, Bitcoin over the weekend is going to do some weird stuff. I expect that, and I plan for it. But for the most part, I really do try not to day trade. Like literally, I'll swing a trade.
Okay, and here's one other helpful thought. If you can't really day trade, what you can do is instead of entering into a position at 11 o'clock or 11:30, you could wait for 2 or 2:30 p.m. and look for that last bounce. In fact, today you could have waited. I could have saved all my trades today till 3:30 p.m. I could have got in TTD. I could have got in DocuSign. I could have got in Roku. I could have got in everything, basically Square, about 10 or 15 or 20 minutes before the market closed, and I would carry those positions overnight. So if you can't day trade, it's a good thing to say.
When you buy, but also think about this. Say sometimes that you have positions from the previous day that you want to sell that you might want to get back into. Just buy a slightly different strike.
That's a good one too. Yeah, that's excellent. I love that, actually. That's a great idea. All right. So everybody, by the way, if you're just watching now, please give us a thumbs up, subscribe to the channel, pay it forward, and share the broadcast with someone. UVXY. What do we think about the UVXY? This is funny. They have these chat rooms for the UVXY. I don't know if you ever go in them on Joe Weeble and stuff. And all these people say, now the UVXY is the volatility index. So everybody's expecting the UVXY to spike to some ridiculous, because when something bad happens, it'll spike like 30%, 20%. Now, here's the thing. They go in every day and they post on these message boards. Today's the day. It's going to rocket ship. But what I tell them is we're at all-time highs for the market. We're off like 60 points from an all-time tech high. So they're expecting the market to fall. It's not gonna fall off a cliff. If the market, it'll consolidate. People aren't throwing up the market. The market's not losing 2,000 points like people said it might lose. So I think that's a little crazy. However, my advice on the UVXY is it's so low now, I wouldn't play either side. If the markets are strong, it'll likely fall under $25 on Monday, which would be a good return. However, if the markets are all shaky, it could easily jump 5, 6, 7%, which would be like a whole $1.50.
I think people forget what that is, right? Like they think that, oh my gosh, the NASDAQ and the Dow are going down, so the UVXY must spike, and that's not what that is. It's a volatility index. That means that whenever the market is not, when it's volatile, right? So it can be volatile in either direction. It can be volatile in a positive or negative direction, right?
And
So
right. No, I get it. Along the same lines, the markets could both be down 40 points, but as long as they're a calm market, the UVXY could be going on. Also, the UVXY actually draws upon the futures of the market, so it doesn't actually react to the market going down today. But if people say if the market's going down or losing 300 points today, the futures are off a lot. But sometimes the market will go down 300 points and the futures contracts won't really move that much, which is why the UVXY continues to go down and people don't understand that.
Yeah, I wait for spikes for that. I don't play the UVXY when it's
so
not doing much.
I completely agree with you there. All right, let's get another. Let's just love some questions. Love, Bex, you have to have a merchandise. WWLD. Love, do you know?
Oh my God.
Oh,
no.
Well, what would Love do? Oh, I got you. I was going to look up the stock. No. Oh, I like that. Okay, wow. Okay, yeah, it just shows how old I am. I'm so outdated. Hey, Love, are there any stocks that you watch a little less expensive than, say, SQ? Real quick.
Absolutely.
Yeah, but real quick with SQ, if you go out of the money, let's say you take a September option and you're like a $320 September option, which is far out of the money. If Square moves $10 upside, you're still going to return like 40%. So you can still afford to play Square. It's the whole fact that you got to get in and out the next day. You don't actually want to hold Square saying, God, it's got to go to 340 because that makes you riding the elevator. But anybody can afford an option in anything. If you have $200, you look at the option you can afford. It could be way out of the money, but as long as you have time and you're correct about the stock, you can get that return. But
this one, I have two things to say about it. One, if you are on the platform, which I know you are, there are a lot of small account challenges that are like have their own tabs. They're good for being able to pick out really good, low cost options. So that's a good one to follow. And two, the small ones that I have where like I have some Pfizer options that were like trading as low as 1 penny today. Like they went up as high as like 5 cents and they were as low as 1 penny at one point. So
can I make a guess?
Yeah, sure.
I would say they expire August 20th and they're like $60 or $70 calls. Any close?
No, you're not even. So, so they were like, they expire next week.
Okay.
And they were $49 calls. And I got some 45s and some 49s. So those were really low. And then with the AstraZeneca ones, I think those were also for next week were pretty low as well. And so, yeah, I always pick a couple of the smaller ones because just like FCX, I think that they have potential. I think I read somewhere that there was some dark pool in Pfizer and AstraZeneca. I was like, okay, well, if they're buying,
you might have thrown maybe $100, $150. You bought a bunch of $1 contracts, a bunch of $5 contracts. Let me just interrupt for real quick. GameStop. Remember when we had the GameStop fiasco? I had a friend in the family. Guy spent $400 on GameStop contracts, and when GameStop, he bought them on the Monday. When it spiked on that Wednesday, his $400 were worth $152,000.
Why? Like, are you crazy?
Well, because obviously they were inflated. And he actually got out with $127,000, which is crazy for $400. Now that shit doesn't happen. But $400, he had contracts that were $720 calls that I was like, dude, you can get $5 for those tomorrow. That's perfect. You know, people paid him $40 for those calls. $40.
Yeah, if there are more COVID vaccine news that comes out over the weekend and Pfizer or AstraZeneca wants to jump $10, hey, make me a millionaire. I don't.
And also, if you can find the next meme stock, it's not Robinhood because Robinhood is too popular. It's not going to be AMC. But let's say the AMC people wanted to go over to Cinemark, who had earnings today, like CMK or something like that. They actually had earnings. It's a movie theater chain. Let's say the Reddit boys wanted to have some fun with that. You buy options at like $25. I bet you can pick them up for $1. If they ever have fun with a stock that's not known and you get lucky, your $100 can literally turn into like $400,000.
Absolutely.
I take $100 play every now and again. I pick a stock that might go crazy. Like Love, I buy $101 contracts that are ridiculous. Like I'll buy them on Wednesday. They close on a Friday. And I'm saying if someone has a little fun with this tomorrow or the next day, I'm going to make a lot of money. I haven't won yet. I've done it 4 times. I've lost $400.
See some sort of like slight news, nothing that's like real huge, but I'm like, oh, that might actually happen. Well, then I'm definitely gonna probably. Yeah,
I like what would Love do. I'm gonna have to start using that. Hey Matt, TLT puts, get some time on them. All right, let me see what TLT is. I think that has to do with what bonds, right? Yeah, the 20-year bond. Yep. Yeah, I mean, it's dropping pretty hard. I actually have two others on my watch list. The TLT is opposite of the two that I follow, and I'll tell you guys the two that I follow, which I mentioned on my watch list, which is TMV. So if interest rates are going up, TMV and TBT, which is the Pro Share Ultra Short. Again, they both went up about 5 and 4% today, but these can significantly move. And when I say significantly move, if the inflation and the interest rate of the 10-year spikes, and we're looking for it to spike. If it goes past 135, then everybody should get worried. If it goes past 135, then NASDAQ will go lower, okay? If it does not go past 135, say you wake up on Monday, it's 130 right now. The 10-year consolidates back to 128. That's fine. Tech could have a strong day. If you wake up on Monday and the 10-year is 136, I would be very weary on tech, and you might see an exact same day, just like today, where the Dow is strong, tech is weak, and inflation are going up. What do you think about inflation or any of these? Do you have any things that you follow that have to do with the 10 or 20 year, or any thoughts like that?
So no, but I do make sure I'm aware where the 10-year is, just because I know that if it spikes like it did today, that it's going to affect my tech stocks. So that's pretty much the extent of that.
Right. Yeah. As of this morning, the 10-year went from 122 to 127. And then this afternoon, I think when tech took a little bit of a tumble, it spiked all the way to 1.30, which again is a pretty significant spike, because we went all the way. And now you got to remember, 4 months ago, it might have been February or even March, we were talking about it was at 175, and they were talking about inflation was going to go to 2%. It was 175. And then every day we spoke about it, and we spoke about deflation, and that Kathy Wood said it was going down. And then she also said oil's going down from $70 a barrel to $17 a barrel. So she's a little ahead of her time there, but she's at the right sentiment. All right, let's get another question. See if we get some more questions for Love.
What's your strike and expiry date for Roblox? I don't have Roblox, actually. I sold them this morning.
Okay, if you were to look at Roblox,
I would have bought today for sure. All
right. So, do you like Roblox still?
Roblox doesn't like me. That's the problem, right?
Okay.
So today, when it went to like 78 and something, I would have probably bought $80 or $81 calls for next week. That would have been my play had I gotten in, but it just does not like me.
Okay, so if you do like Roblox, just so you know, you have to be a fan of tech strong. If you look at the 1 month Roblox chart, it definitely consolidated over the last 2 days. But the 2 days prior, where they pushed it up to $82, there was double the amount of volume. So today it traded 4.5 million shares. I bet you those 2 other days that it was spiked up, they probably traded north of 10 or 11 million shares. So understand this: the same people buying the 10 or 11 million shares aren't turning around in the last 2 days and selling it off. They are still holding. So these are the institutions, the large investors. They're probably holding for $96 or $97. They really don't care if it takes 1 month, 3 months, or 5 months, because understand they're going to get a 28% return, which would be enough for an institution to carry a stock forward 2 years. They look to get returns on a stock of maybe north of 11% would be a full year. So if they can secure 27% in 3, 4, 5 months, that's a great hold, and they're out. Because let's remember, some of the funds they manage, if they return 14 or 15% on a year, they're one of the leading funds. No funds return 30%, 40%. So where we're looking for 30 and 40% in 1 day, and we're looking for 100% overnight and shit like that, nobody does that. So please understand that we're doing things a little more dangerous, but again, we have strategy and we have rules. All right, let's get a couple more questions for Love. Congrats. All right, information, news, tips, Webull, flow, orders.
So when I look at Webull, what I look at besides the 1 month and the pattern on the 1 month and the pattern on the 3 month, I'm looking at the very bottom where it tells me where the large orders are, right? I want to know what the institutions are buying, right? And if it's increasing, is it decreasing, or they going opposite of each other, things like that.
Okay, excellent.
And I do read for sure. For sure.
Yeah. And just to suggest, I don't use something like this, but a lot of Lifetime members have recently been talking about a flow chart. So I don't know the services. I'm sure you could Google it, but it basically tells you the flow of the stock. So it tells you the investors that are spending $25,000 up, the investors that are spending $50,000 up, and then the whales that are spending $100,000 and up. So they'll tell you 70% of the whales spending $100,000 are bullish on the stock. 60% of the smaller investors are bullish on the stock. So you really look where the big money is, and you see where the big money bullish. And I'll look that up. I'll see if I can get a flow chart or some type of program that we could.
The put to call ratio is helpful too. Like you
put
just
to call ratio is good too. Or call to put. You just know where the majority is, and that's some free information you can get off the internet as well.
Yeah, I want to know where people are buying.
Okay.
Hey, Carlos.
Oh, excellent, Carlos. Let's get rid of her card. Hey, what are your guys' thoughts on big Xylo sell off the end of the day? Okay, so I know Xylo went from 112 to 105. If there's a big sell off the end of the day, it probably went lower, but I think it lost 7%. Right, let's see where it went. Maybe I was just making up that number. Okay, it actually went to 101. So it went from 110 to 101. Huge sell off. Did they just have earnings or something? I don't know why Xylo would sell off. I mean, it looks great.
Bad housing numbers or something like that? Like, what happened?
Yeah, I couldn't tell you. I could tell you that the volume was pretty strong, but that the inflow has been going strong since about July 20th. So out of the last 12 or 13 trading days, there's only been 3 outflow days. Now, today's volume was significant. So I'm not really sure what the news was. But before I would buy, they just had Q2 earnings and revenues beat estimates. So I guess they reported earnings today, although it doesn't say that. So again, what we keep seeing, big sell-off with earnings. Now, I believe actually Xylo said that they actually had $1 billion. They did something really good. So yeah, just like some of the other ones, you might take one contract, one position. Maybe you'll buy out to September 17th as a tester. If it drops, you can average down. But that chart looks okay. But I would definitely do a little more research before, because it actually break to a lower point. It hasn't been this low since November of since November of last year. So I'd be very cautious with Xylo. Plus, I think home prices are overstated and maybe everybody's done moving. All right, let's get one more question for Love, and then we'll tell everybody thank you so much and have a wonderful weekend. So let's do 2 more stocks. What do you think about Cisco? Any opinions?
I don't know it.
Yeah, I don't know Cisco either. I'm looking at the chart of Cisco. I'm looking at the 1 month. All right, there's been huge inflow and demand since it hit $50. It's going to have some resistance, though. I think, there's resistance at every level. I would steer clear of Cisco. It looks too good. And I think Vuzi used to be like a meme stock of sorts. It had a terrible, terrible looking chart, and it still does. I would stay clear of Vuzi.
Actually, so what happened? I said I don't like either one of those. But before we go, there was a comment that I saw scrolling down that we missed. So somebody asked, how do you know when to sell an option, Matt? How do you know when you're going to sell?
How do you know when to sell an option?
Yeah.
Well, the thing I do is I secure profit. No, it's great. So it's the same thing I said in the beginning. Whatever I pay for an option, I use my calculator, and I had to help someone do this the other day. Okay, I take my price. My average price is $147. I want to make 20%. I take 147 times 1.2. All right. The 2 is for 20%. So if you want to make 35%, you do times 1.35. The point is, I just use math. It's not like I'm watching the stock going, okay, I used to do that. I used to try and make 100% on every trade, or 80%. I was on fire. I'm on a different kind of fire now. I'm making those tall 20%, 30%, 38%, 22%. I'm in and out constantly all day. So that's what I do. Even if you have a small account, I want your trades to be successful. So if you're just doing one trade for a day, you're in for $200, set that 20% profit margin. Set it for $240, leave it alone. $40 is better in your pocket than losing $100. All right, let me find you a question. No, I'm just kidding. All right, everybody. Thank Love for joining us. This was great. Hopefully she'll come back and join next Friday. Maybe we can put her on the other side so that I get the small little thing.
I will definitely tell you how I decide to change. To sell it.
Excellent. Listen, if you come on next week, I'll give you the big window and I'll take the small side window. Thank you, everybody, and have a good weekend. All right. Bye, everybody.
Is that it?